Well, we're going to take a look at your grain market activity in this particular segment and bring in a little expert help along the way. In fact, let's go right to Chicago and bring in Oliver Sloup of iiTRADER. He's positioned himself right at the edge of the trading floor there. And Oliver, happy Monday to you. How are you?
I'm hanging in there. We finally have some good weather over the past weekend, so it's nice to spend some time outside. Hopefully it sticks around, gives those farmers an opportunity to get some field work done. Yeah,
that is a relative term, isn't it? Because it may be good weather, but it may be wet weather. I'm hearing a lot of planting delays may continue. A couple of storm systems may move through the Corn Belt this week.
That's what it's certainly sounding like, and I think you're seeing a little bit of a premium come into the market for that. But there's a couple other factors that we're looking at outside of just the near-term weather. Obviously, going forward is probably going to become more important, but we do have a WASDE report tomorrow. I think that'll play some significant role in the market. I don't think it's necessarily going to make or break things, but definitely have an impact going forward. Now, when we're looking at the corn contract, we're really right in the middle of the range. We're trading a little bit higher on the early morning session, but I don't think the bulls need to get too excited. The bears need to get too depressed just yet. Like I said, 355, 370, that's the range we've been trading in, and we're really just sitting in the middle of that, and I think we'll probably continue to trade in that range throughout today's session, really until we get a new fundamental catalyst to break us out or break us down. But going back to weather, I do think there's probably more opportunity for some premium to come into the market, which will be more beneficial to the bulls going forward.
Okay, well, let's run through some of these prices for everybody. On the corn, as you mentioned, the firmer tone there. Right now on the May corn, we're 4 1/4 higher at 363 3/4. Your new crop December contract, well, they're adding 3 1/4 cents to that today at 387 3/4. Now, looking at the soybean trade, currently you have the May contract down 1/4 cent at 941 3/4 per bushel, so within a penny of our low of the opening range. That's already about 7 cents off of our overnight high, so they were significantly higher overnight, and they're giving that all back now. November soybeans down 1/4 cent at 949 1/4. Any reason as to why that market drifted off of its highs the way it did?
Well, we were a little cautious. We saw the market get some strength in the overnight session, but we often remind our clients that volume confirms price. And a lot of times in that overnight price action, the overnight trade, you don't get the volume to confirm the price action. So we warned a lot of our clients this morning, you know, the floor open's going to be more telling than the overnight trade. And we saw the seller step in and take advantage. We know the funds over the past couple of weeks really have been not only covering long positions, but have actually flipped to net short. And I wouldn't be surprised to see them continue to do so. Key technical support for the May soybeans, 935 to 937. If that gives way, there's really not a whole lot in the way of stopping this market to get an 8 in front of that price.
Of course, all kinds of soybeans being shipped out of South America right now with the harvest continuing there. And I neglected to mention on the corn, we did have an overnight sale of corn of 101,000 tons to unknown destinations. So that helped the corn market too this morning. What about the wheat? Let's look at wheat here, Oliver. On the Chicago market, on the May contract, we're now 2.5 higher. 426.5 now, the last trade, and July 2 1/4 higher. Kansas City, we have the May contract there now trading 2 higher at 423 3/4. July up 2 at 436 1/4. And in the spring wheat trade in Minneapolis, we have the May now just 3/4 higher, and July up a penny at 526 3/4. I'm hearing a lot of rumblings about the fact that they can't get spring wheat in the ground further north, though.
That has been a lot of the talk, and right now I think you're just seeing this wheat market kind of tread water in the middle of its range, much like the corn market is doing, and I wouldn't be surprised to see that continue, at least for the very near term, until we can get some more fundamental catalysts going forward. Obviously, tomorrow's WASDE report, but I think the corn will probably be more telling than anything here in the near future. Now, with that said, there are a couple external factors that we're watching very closely. The U.S. dollar obviously has an effect on all commodity prices, and in the grain market, wheat seems to be the one that typically moves a little bit more in a correlation with the U.S. dollar. The U.S. dollar is coming up against trendline resistance, so if the dollar does fail out, that could offer some support here in the wheat going forward throughout the week.
Okay, I'll bring you back here in a moment. In the meantime, we'll take a look at the cotton and head into the break. On the cotton on July,